Thank you for joining us at xm.com. This is the Weekly Outlook. I'm Christina Marucos, and joining me today is Senior Investment Analyst Mario Sechikiriakos. We'll be having a look at this very busy week. It has two central bank meetings for us, as well as a barrage of data, so let's get right to it. Marios, let's start by having a look at U.S. non-farm payrolls that are out on Friday. It's known that the Fed keeps a close eye on the labor market in order to decide when to start tapering. Now, given the patient remarks we had earlier this week by Fed Chair Powell, how important will the jobs report be, and how could that affect the dollar?
Hello, Christina. It's going to be tremendously important. So the forecast suggests we're going to get 900,000 jobs back this month, so almost a million. Now, here's the important part. The US economy is missing almost 7 million jobs for a full recovery, for us to go back to full employment, right? Now, around 3 million of those are people that retired. The pandemic hit, they were close to retirement. They thought, I'm going to go out of the labor force, I'm going to enjoy my retirement. So that means we are really missing around 4 million jobs, and we might get 1 million of those back just this month. So if we keep up this pace, that means that by the end of the year, we might be back to full employment, which is extremely positive news. Now, what does that mean for the Fed and for the dollar? Powell was super patient this week. He said something like, we are not in a rush to taper, interest rate increases are still far away, and overall, he was relatively cautious. However, there were some encouraging remarks as well. For example, he told us that we are clearly on a path towards a very strong labor market. And he also dismissed the Delta variant as being a major risk to the economic outlook. So what's the bottom line here? The Fed wants to see another couple of employment reports at least before it pulls the trigger on tapering. So August may be a little too early for a tapering announcement, but in my view, September is still in play. And if not September, then it's November, most probably. So that waiting until September would allow the Fed to examine more employment reports, and by then Congress might also deliver another massive round of fiscal spending on infrastructure. So long story short, I think that heading into the autumn, we're going to see the Fed change tune. They might announce tapering. That argues for a stronger dollar, especially against the euro and the yen, because neither the European Central Bank nor the Bank of Japan are going to follow the Fed anytime soon.
And now let's turn to the central bank front. We have the Reserve Bank of Australia, which meets on Tuesday, and markets are anticipating it will have to make a U-turn regarding its stance on trimming asset purchases. What are we likely to see out of the RBA meeting?
Well, it's certainly going to be interesting. So 4 weeks ago, the RBA told us something like, the economy is doing great, we're going to slow down our asset purchases because of that. But since then, we've seen lockdowns in Australia. Those lockdowns were extended. And right now, it looks like the economy is going to contract in this quarter, and that will definitely cost many jobs. So the RBA will probably have to make that U-turn. Policymakers have long told us that, yes, we're cutting asset purchases, but if anything goes wrong, we can always increase them again, right? So I think they are going to demonstrate that flexibility next week, and they might abandon their tapering plans, essentially. Now, if that happens, that would be a very negative signal for the Aussie, at least in the near term.
And now let's have a look at the Bank of England as well, because it meets on Thursday. And it might be interesting to see what the central bank signals, as we've been hearing conflicting views from policymakers lately. Given the pound has been gaining on the back of a weaker US dollar lately, how do you think it will move after the Bank of England announcement?
Well, I see some minor upside risks. So you're right, a couple of Bank of England officials broke ranks recently, and they threw their weight behind tighter policy, basically. So their argument is inflation is already running hot. If we don't take our foot off of the gas, that could start to infect inflation expectations. People might start to expect higher inflation down the road, and that might become a self-fulfilling prophecy, right? So that's not what we want. So those are two members. The Bank of England is 9 members in total, and the rest of them don't really share this view. Most members believe that withdrawing stimulus early would be an even bigger risk because it could hurt the recovery, especially now that the government is phasing out some of its support programs for jobs and so on. So what are we likely to hear from the Bank of England this week? I think they're going to tell us that the economy is doing better, but it's still a little too early to withdraw any stimulus. Now, those two members might dissent and they might call for an immediate withdrawal of stimulus, but that's not a game changer either, as long as it's just two members. Now, for the pound, I think that argues for some minor upside risks. We've seen it stage a phenomenal recovery lately, and I think that the outlook remains positive. The UK has one of the highest vaccination rates globally, and ultimately the Bank of England will be among the first major central banks to raise interest rates again, which I think is good news for sterling overall.
Marios, it was great having you with me today. This was the Weekly Outlook here at xm.com.